Good afternoon, everyone. My name is Rob Blackstein, and I'm a partner at Borden Ladner Gervais in the Toronto office. I'm a transactional lawyer that works on a wide array of energy and infrastructure projects for design builders, public authorities, and developers. First, welcome everyone to our conference today. I want to thank all of our attendees for registering and our panelists for volunteering their time. And thank you to the CCPPP for hosting today, and just a bit of plug for them to check out their website and register for future events. So thanks everyone. This is our second panel, as people may know, on the evolving project delivery model for public infrastructure. Our first panel was from the authority perspective, where we heard from some of the reasons why owners are looking at the IPD model and other alternative delivery models for public infrastructure. So today's panel is from the contractor perspective. We're going to discuss alternative models, dive a bit deeper into some of the key differences between these models and the IPD model that have been used to date in Canada, and provide some insights on and some perspectives, both pro and con, on their use. So I think a lot of folks know our panel members already today, but I will provide a brief introduction to them. Their names and titles speak for themselves, but I'll start with Darren. Darren is currently leading AECOM's P3 advisory business. He was formerly with Acciona, Bilfinger, and Macquarie, which has provided a front row seat to the evolution of contractor and developer engagement with the P3 model in recent years. Steve is formerly with Flatiron and Bilfinger, and he's currently with Parsons in a role that expressly includes integrated project delivery. Jean-Louis, together with his colleagues at Aecon, has extensive broad experience working with many different project delivery models and in many jurisdictions around the world, including Canada. And finally, Chris Eagle's a partner in Vancouver. Chris has a broad base of experience in capital projects, working with a number of different models, also in a number of different jurisdictions. And thank you everyone in advance for panelists for participating today. It should be a very lively and great discussion. Before I kick it off with our first topic, just a small point of order. I see some bubbles already in the chat. We're going to have a question and answer period at the final 10 minutes of our session today. So I would just encourage everyone to use the questions tab in the window and not the chat function if you want to pose a question. So with that, I think we're going to kick it off. We're going to start our discussion today with a bit of a broader based theme with probably the underlying reasons for the evolution towards IPD. And before getting into a deeper discussion of the mechanics, I think it's helpful to understand from the contractor developer perspective why contractors and developers view authorities moving towards this model. And the reaction of the marketplace to it. So with that, I'll turn it over to Jean-Louis to start.
Thanks, Rob. Yes, let's have a look at the different players around the table under the actual model. I mean, the P3 lump sum turnkey model. First of all, we have the owner. The owners are happy with the actual model. It has allowed them to produce a steady and robust stream of projects they have been delivering, but they are just becoming exhausted with the intensity of the fight within the system. At the developer level, I would say the DBOM, the SPV, I mean, they are also happy. We are part of them. Bondholders are happy. Lenders are happy. Security package providers are happy. It's a very, I would say, self-contained system, almost no risk, adequate return, so no real issue. At the operating and maintenance level, they are also happy. I mean, it works well. Returns are okay. When we go to the DB part of it, it becomes a little more complex. I would say the designer, mainly speaking, are happy about it when they are only designer. It has allowed them to grow and to grow profitably. Most of the time, their contract is just go around time and material. They have the leverage because no design equals no work. So usually it works well. At the contractor level, it's much different. Contractors are struggling. They are also exhausted, of taking risk, especially at a moment where it's very difficult to take those risks, because you have interferences from third parties. I'm talking about permits, I'm talking about utilities. You have also a moment to fix the design, to get it detailed, and to take so much risk before it is time has exhausted the contractor. So what is the consequence? Lack of proponents. This is what was said 2 weeks ago. Or when you have sufficient proponent, stockpiling risk that may probably never happen, and the owner just feels they don't have good value for money. Why has this happened? When I was thinking about it, I think most probably because a few of the different players have been playing like sorcerer's apprentice. On the contractor side, evidently, being the lowest bidder, embracing huge risk at a moment it was most probably too early and too difficult, and is a very difficult strategy. At the owner level, evidently, I think the owner have been refining and refining project after project their contracts that have become, on one side, totally bulletproof, but so much rigid, with such an important lack of flexibility that it's extremely difficult to get them produce something. So yes, it's about not killing the model, because it has been extremely powerful to produce projects, just fixing the issues. And I think we're going to speak about it a little later.
Thank you, Jean-Louis. I see that there's some folks are having some technical issues through the chat in terms of accessing the video. I'm just hoping we can get those people some tech support. Looks like just mention to everyone just quickly, if you're trying to connect through a VPN, to turn your VPN connection off. That may help. So Darren, should we turn over to you for your experience and your view?
Sure. And we were having a bit of a discussion just prior to the call here about some different perspectives, and I guess I've seen this from the equity side and the contractor side, and now sitting on the designer side. There's sort of always a discussion about, we're not using the model properly, or we're not doing the right thing, and there's always some truth to that. There's always room to improve, but there's also an aspect of the medium being the message in this, and that the model and the market's response to it are so completely intertwined that you can't separate them. So we have to look at how we tweak and adjust the models we have to get a better response. And why are we having this discussion? The clients have been very clear. They thought they were getting fixed price, date certain contracts, and instead they're getting fixed price plus large claims and date not so certain. And that's not what they wanted out of the process. On the same side, the contractors are not finding that the risk transfer is profitable. And I think, I would say the design firms are sharing some of that, although I acknowledge that the contractors do share the biggest load there. So, it's time to move something forward. And Jean-Louis said it perfectly. The model's been squeezed and squeezed and squeezed. And we've also seen the evolution of its application to new kinds of projects that have a different context of stakeholders and intrinsic risks. And it's time to have an open discussion about how we fix it. Now, this is a version of the collaborative contracting discussion here, but we also need to look at some more formal structures for doing that.
Steve, over to you.
Yeah, one of the questions I think you posed earlier, Rob, or at least in the text, was, is this unique to just Canada, or is it across the globe? I think fundamentally we see it's everywhere. We as contractors and engineers and everyone in the private sector, we have a fundamental goal. We're not embarrassed to say it. We want to make money. That's our goal. We want to deliver projects safely and make money. And a lot of these big projects, the majority of big projects over the last 5 years, most of them have had significant challenges. And I don't think you could look at one major contractor in our industry that hasn't suffered very significant losses. And as a result of that, major players like Bilfinger and Flatiron and Fleur and S&C and Granite, a lot of these groups are taking a pretty serious view of these procurements, and a lot of them are electing not to even participate, or if they get in the procurement, they realize that the risk transfer doesn't work for them, and they actually drop out. I was the chair of the major projects group here in BC, and we produced a number of white papers talking about bid stipends, risk transfer, the procurement process, and we shared them with a lot of the different authorities across the continent. And I think it's helped sort of talk from an industry perspective versus just a one contractor perspective, and they recognize that these views are an amalgamation of different contractors. And I go to a lot of these one-on-one meetings, Rob, and I always say that, if we can't quantify the risk, we can't cap the risk. Our boards are not going to allow us to bid these projects anymore. They're very sensitive to open-ended risk transfer. And, whilst when we were bidding these things 15 or 20 years ago, we really didn't know what we didn't know at that point in time, and we were able to work our way through it. Because of the significant losses over the last number of projects in Canada and the US, it's just not tenable anymore. On the right side, I was the project sponsor for the Edmonton Valley LRT, which we won in the end of 2020, and I'm the project director for the delivery of the project. And the city, when they first went through that 18 months ago, or 2 years ago, I guess, a lot of two of the major teams pulled out, and they had to revamp the procurement process. And they made an active process of listening to the contractors, listening to the developers, understanding what the main concerns are, and ended up, I believe, with a risk transfer that was more balanced. It wasn't a wholesale change, but it was enough to allow us to understand the issues. And I think, we're early stages in the job, but we're both working hard to be good partners on that. And I think, that's a key element to these jobs where, yes, you've got this massive document to be able to work towards, but you also have to have a degree of pragmatism that's put in there. And so I guess the key message I would suggest here, Rob, and I think the model is good, as Jean-Louis started off by saying, but to make these mega projects successful, and I think it's important for the government to have that procurement process as one of their elements, we all need to be more collaborative through the procurement, the installation, and the handover and the warranty phase, so that we can show that the projects can be successful for both the owner and for the contractor.
Thank you. Chris, over to you.
Rob, are you moving on to the next topic then for me, or
we can, if you have any thoughts on this, we can stay here on the underlying reasons, or we can move to the next one. We still have a couple of minutes left on this.
Sure. Yeah, I think the primary thing is that it's an effort on the parts of the authorities and the owners to react and respond to some of the issues that they're seeing and that the other panelists have mentioned there. And, I think we're going to have a good discussion today about whether, and I think the others have alluded that maybe the wholesale change in process wasn't necessary in order to adapt to and accommodate some of the concerns that have been raised, that perhaps they could be dealt with within the existing models. But I think it is an effort and a recognition of some of the challenges that have been arising in terms of risk and success of projects, and an effort to sort of move and respond in a meaningful manner.
Rob, one of the things that we were talking about, if we still have a minute or so, just the warm-up session, was the whole governance structure. And for me, I've always been looking at that over the last bunch of years, sort of thinking, you can have the best client and the best contractor in the world, but if you're on these $2 billion, $3 billion projects, it's very difficult for the owners to be able to get approval. And we know there's going to be changes. We have this whole suite of supervening events, and as much as we want it to be fixed price, time certain, we understand that there are going to be impacts from the contractor, and they're identified at the beginning, and which ones the governments are going to pay time and money for, and so there needs to be there is a process to establish those. But the governance structure that these massive projects, sometimes the owner doesn't have the authority to actually settle these claims, and they have to go much higher up in the food chain. And a project that we did in Montreal, we had a great client, but they had to go right up to the the federal government for cabinet approval on some of our changes, and that just takes time, it takes energy, and meanwhile the contractor is out of pocket a lot of money, and it just makes it very difficult to do. So I don't know how you resolve the governance structure in terms of downloading the ability for the project team to make those decisions, but it is something we need to be thinking about as we go forward.
Steve, I think that's a really good point, and it's one I think we'll talk about a little bit later as well in terms of the joint management structures within, for example, the alliance, and the collaborative decision-making process in those joint structures. I think have some benefits in terms of being able to deal with things more timely, but also as a result of the inherent limitations, I think will also present some additional and some novel challenges to deal with.
Yeah, I mean, just listening to I think one of the premises is the collaborative model moves that discussion up in the process to where it can be more efficiently had without all of the time pressure of an active project hanging over it. And that's, the issues don't go away, but let's deal with them at the appropriate time in the delivery process. And that maybe is the crux of the discussion.
Jean-Louis, any closing thoughts on this before we move to our next topic?
No, I think everything important has been said.
Okay. Chris, did you want to take the next one? Start off?
Sure, certainly. So thought next I would try and outline some of the key differences between the models, in particular between the traditional, if you can call it traditional P3 model, and the Alliance and IPD in particular, to provide a foundation for some of the following discussions. So, I think the fundamental difference that the models are trying to achieve is the shared risk and reward, as has been alluded to. And so, where the P3 model focuses on risk allocation and cost and schedule certainty, some of the alternative models are trying to move towards a more shared risk and reward structure, trying to create a framework that where sort of, I think as Steve said, everybody works together, everybody's collaborative, and you're trying to figure out sort of what's the best for project, and that's your general objective. Which sounds great, but obviously has some challenges when it comes to implementation. So one of the key tools in that shared risk and reward model is the payment structure, and essentially instead of the traditional fixed price, it's more of a performance-based payment model or performance-based compensation model, where the contract price is divided into a number of buckets. And so you've got sort of at the bottom end, you've got your reimbursable costs. You've got a fee or overhead sort of section, and then you've got on top of that the incentive or the profit pool that is where the parties make their money, or the contractors make their money. And one of the key differences in that is that it's treated more like a cost plus contract, where you are dealing with actual costs, oftentimes with the involvement of an auditor or an auditing process. So it's a true open book, transparent model, which is obviously a big difference, and one that we hear a lot about in terms of some of the criticisms perhaps of the P3 model. The idea being that rather than a fixed price, the parties establish a target price for the work, and if the ultimate actual cost comes in below the target, the parties share in that benefit, and so there's additional profit, additional benefit to the contractor and to the owner, and the sharing is done on the basis agreed in the contract, and may be a 50-50 or it may differ. The flip side, of course, is that if the costs go over, the contractor essentially starts to lose some of their profit and their overheads. And the theory being that the contractor will always be recovering their actual costs, project-specific overheads, and their actual incurred costs, so that they don't lose money. But as I think it was Steve mentioned, the only reason that you do these projects is to make money, and so so that's where the sort of the shared risk and reward comes in. The idea is that you don't have any, there's no losers. There's no true, you're not going to lose money on a project, but you may not make money, or you may not make as much money. And that's the kind of the balance that's trying to be struck in that regard. Now, the contractors, sort of the pain side of that is capped typically at their profit and the corporate overheads, in order to essentially make sure that there's no loss at the end of the day. One of the interesting features, some of the projects along the performance and payment mechanism will also include additional KPIs or performance incentives for things like environmental performance, on-time performance, things like that, that's perhaps take away from the direct model that I talked about, and provide additional rewards for additional behavior that the owner may be trying to incentivize. And I think somebody on the panel already mentioned the idea that the setting of the target cost is done later. So one of the key things that we'll talk about a little bit later in this presentation is that you're not bidding a fixed price. You're not bidding a price up front. The price is actually, or the target is set later in the process as the design has further developed. The theory being that allows for a better understanding and a better assessment of the risks, and the ability to reduce some of the risk premiums or the contingencies that would otherwise be there if you were trying to price it earlier on in the design development phase. Happy to continue with some of the other keys, or if anybody has any reactions to that. I saw Steve nodding.
No, I think it's good. I mean, the whole idea about this alternative process, it's really just, and we'll talk about it a bit later, how you sort of select them. But once you sort of start the process and the journey with the contractor and the owner, or the contractor, engineer, and the owner, however that mechanism is developed and determined, I think truly there are opportunities for more innovations and a more clearly defined understanding of the risk allocation and how you price those risks. I mean, when we are in a competitive environment in a true P3 process, when we're asked to take a risk, we always make an effort to price it. It's not transparent to the owner how the pricing is done on that aspect, and so they don't know whether they're getting value for money. We as a contractor don't know whether we ameliorated the risk in a manner that is sufficient to our board. So I think, if we're looking at, one of the key differences with this alternative model is that it puts the transparency much more in focus. I think in my mind, to do something like that, you need a very sophisticated owner, you need a very pragmatic contractor, and you need to have a very clear focus of what your the governance structure is going to be, how you manage this process you go through. So it's all well and good to say that these new BUTE ideas are great, but at the end of the day, all we're trying to do on all of these models is end up with a degree of certainty both for the owner and the contractor, that the owner gets the project delivered correctly for themselves, and their definition of correctness is probably a little different than ours, and we need to make sure that we as contractors deliver the project safely and that we receive what we perceive to be a fair margin for our job. And that's what all these models in my mind, Chris, are trying to do.
Absolutely.
Chris, you're describing the strict alliance model, and if you have the alliance model on one hand and the strict design build on the other, there's this middle ground, progressive design build, that sort of tries to integrate useful elements of both models.
Absolutely. Yeah. And as I say, and right now is trying to focus more on the the extremes, I guess, if you call it, and then we'll come back, as you say, Darren, to the mid ground and perhaps where the happy medium can be found, but in terms of addressing some of the concerns the contractors are raising and some of the objectives that the owners might be trying to achieve. So one of the other defining characteristics of the alliance or the IPD model is the no blame or no claim concept, and something that was touched on in the first session, that one of the key elements there is that attempting to avoid the finger pointing between the parties that occasionally, I'll say, comes up on some of the major infrastructure projects, both within the contractor team, the design build team, and between the contractor and the owner. And so, again, one of the principles is to avoid the win-lose dynamic. And essentially on that best for project concept, you're trying to either get a win-win or, unfortunately, sometimes a lose-lose. But, it's we all win together, we all lose together principle is what's underlying this. And part of that is tied in with the joint management concepts and others, that the parties are jointly making decisions that are helping them to work towards the common goals of the project. And because everybody benefits if the costs come in below, that the incentives or the objectives should be somewhat aligned in that part. So typically what this involves is the parties agreeing that they will not claim against one another, subject to certain key limitations, willful default, fraud, things like that. And one of the things that it's trying to do is to avoid the situation that sometimes happens where one party will kind of stand by and watch the other party fail because of the claim regime that's set up. And so if that party doesn't do that, then I'm entitled to make my claim, which of course brings with it its own concerns, as Steve talked about, in terms of having to actually carry and finance some of that through the dispute process and whatnot. But the principle here is that rather than being incentivized to wait for the other party to fail, it's actually in my interest to jump in and help, as I may be able to do that, and that we all succeed together. Now, of course, there's some limitations based on professional requirements and whatnot, where the designer still has to do the design. But there may be constructability input, for example, that a contractor can bring that may help facilitate that process and may come up with a better solution. The joint management we've talked about, typically based on a consensus decision-making structure, typically with two levels of decision-making board or panel, a leadership level and a management level. Management level deals with the day-to-day and can escalate up to the leadership as needed to try and resolve and deal with issues as they arise. They like to refer to them as issues rather than disputes in the alliance scenario. And one of the interesting features of that is that consensus-based model is both good and bad. It's good in that everybody's on the same page, you get agreements. It has some downsides if the interests don't necessarily fully align, and you can result in some stalemate situations as well. So I understand that in some cases they may agree to use something other than a full 100% consensus-based decision-making. And that's probably an important thing for people to be considering under these models, is how is that decision-making process going to work, and is it going to be functional? But the key there is that it really requires a different mindset and, frankly, a different skill set within the people involved. If people go in with a traditional adversarial owner-contractor dynamic, it's probably not going to be terribly successful when they then have to try to work collaboratively and collectively to achieve some different and modified objectives. And the final thing I'll note before I sort of turn over is the continuous involvement concept, that these models tend to drive a more involved owner throughout the implementation phase because of their role and engagement on those decision-making panels. And sorry, I said last thing, but one more, and then I'll maybe turn it over. Yeah, I know. you let me speak.
I've been in a lot of negotiations with Chris over the years. So I know.
You let me start speaking, and someone's got to stop me. The last thing is the opportunities for innovation, and so there's a perspective that these models actually provide more opportunity for innovation because of the collaborative model. And I'll let Darren speak on it. But my take is that the P3 model actually was designed to facilitate, to allow for that innovation through the design build and the design based model. And it's more about the willingness of the owners to embrace the performance specification, the innovation, than it is about the model itself. At least that's my take. Darren?
Yeah, I'll come back to you with the medium is the message as my answer. The market responds to the model in a certain way, and it becomes what it becomes. So I don't think, in the many discussions I've had over the years, there is always a discussion about should we put an innovation forward or not? Is it going to bring any benefit? Are we going to be able to leverage it in any way? And the model as implemented tends to discourage that. You're not wrong. The model was intended to foster innovation by having an output-driven specification as opposed to a prescriptive specification. And various clients respond to that in different ways depending on what they want and how closely they want to bound it. I do think a progressive design build or any model that has an open, a forum for open and safe discussion about innovation that doesn't get impacted by fairness considerations or other sort of constraints, competitive considerations, will possibly surface some additional opportunities, things that might not be purely value engineering, but still have value to the client. And I've sort of thought a lot about how do you get innovation into infrastructure in the first place? It's such a slow-moving field, and but on the other hand, you're spending billions of dollars to build something for the next 40, 50, 60 years. And so it's a really, I think it's an interesting opportunity with the model to see whether it could foster some more innovative discussion and bring that forward where it would have otherwise been quelched in the procurement process by the parties, again, for competitive or fairness reasons.
Yeah, I have a few comments at this stage. Innovation, what you just say, Darren, I mean, today we are speaking a lot about sustainability. It's exactly the same kind of issue that we have with sustainability. Either sustainability goals are clearly entered within the selection criteria, or it's not going to work, because public procurement, it's about lowest bidder, it's about transparency, it's about objectivity of criteria. So the rules have to be extremely clear. And during execution, I mean, sustainable acts have to be remunerated as part of the contract. Otherwise, it's not going to work, and we have the same issue with innovation. So it was my first comment. The second one is about consensus, and I think we have to be a little careful here, because I'm speaking now with the hat of the constructor. I mean, construction is not about consensus. I'm sorry. It's about plan. It's about schedule adherence. It's about engineering, smart engineering. It's about constructability. It's about operational excellence. What I think is dangerous in some of the new models is a sort of unclarity about the responsibility lines. And anywhere in the world, you need clarity about the responsibility line. I mean, contractors are not against risk allocation, not at all. What we just say is that to be able to price enormous risk on a lump sum basis, it has to be done adequately at the right moment when we have sufficient elements to be able to do it, when we have sufficient element about permits, about utility relocation with some operators we don't even have contract with, when we have sufficient element about design and quantities. At this moment, we have no issue in taking risk. Sharing risk is much more difficult, I think, than allocating risk, but we have just to do it at the right moment. And there was a discussion, I mean, there was one, in one of the explanations, we are speaking about capacity. I don't think we are facing a problem of capacity. I mean, the market can find, I mean, there is in the market 3 robust groups for each project. It's basically a problem of appetite. Appetite, I mean, that has gone declining, as Steve said, because we need to make money, and this is important. And some risk allocation are not done at the right moment, and some clauses are especially unfair. But this is being corrected little by little.
No, I totally agree with what you're saying. You know, and just sort of want to pop back a little bit to the innovation thing, Jean-Louis and Darren. You know, different models are set up differently. And, you know, I think about 3 of the procurements here in BC with Portman Highway 1. I always think about that as a classic for innovation. I mean, the government said they wanted 10 lanes of capacity across the river. And, you know, when I was with Billfinger, we had a double-decker bridge, and Keywood and Flatiron ended up with a 10-lane bridge. And, you know, SNC ended up with using the existing bridge and rehabilitating it and putting in a 5-lane bridge. And, you know, that was 3 completely different designs, 3 completely different concepts. All of them were within budget. And so that the government used an output specification. I mean, you look at John Hart, which Aecon won with SNC, and we bid on it. And the whole element, what you did with the penstock and where you put the powerhouse was completely different for our design versus theirs, or the original kicking horse that we did 20 years ago was based on those innovations. And some owners encourage that process, others much more defined. They want the concept design. So I don't think it's a function per se of the model. I think it's a function of what the owner wants to encourage and how they want to sort of see that concept developed from their perspective. And neither one is right or wrong. It's just what the owner feels comfortable with from that perspective. But I think I agree with you, Darren, that you know, the concept of these P3 jobs is to sort of encourage the innovation and capture the smarts of the contractor. And then getting back to something that Jean-Louis was saying earlier about you know, the risks. I think, you know, some of these risks are evolving, and we were talking about at the beginning of our discussion offline about one of the biggest fears that I think we as a group are probably seeing is the whole permitting and you know, the First Nations issues and how we sort of manage that process. And not to be politically incorrect, which people know me know I can probably be occasionally, but I mean, I think we need to face these issues head on, and we need to be pragmatic on how we deal with them and what aspects the owner needs to take on as their responsibility, and what window that they need to give us to be able to manage this process, be it land acquisition, be it the permit approval, be it with in-water works, whatever those issues are. But we need to have an open, honest, and correct dialogue during the procurement. And then there needs to be bands put around how we manage those issues as we go forward. And it doesn't matter if it's an IPD or a P3 or whatever. All of those issues need to be defined before we sign a contract, in my mind.
Well, I'm loath to stop a free-flowing discussion, but I do want to know. We could talk about risk allocation all day. So I do want to move somewhat briefly over the joint management structure, and then Steve, maybe we'll start with you for your thoughts on that in the model and what your take is.
Well, I think a joint management structure is fine. You know, as you know, Jean-Louis alluded to, I mean, we as contractors, you know, are used to going into JV partnerships with 2 partners or 3 partners, and we clearly define, you know, what the project director and the team have to as their responsibility levels, and then when it needs to come up to EXCO, and what decisions need to be unanimous and what decisions don't need to be unanimous, and what levels of authority need to be gone through from that perspective. And analogous to an IPD model where you have a joint management with the with the owner and the contractor, clearly you need to define how you're going to do those things. And it can't be just sort of a wish list. I mean, when we get into these complicated JV agreements with our partners, we clearly detail everything out to the nth degree, and we've got a list of 30 issues that need approval from EXCO and what we can pass down to the project director and how those get dealt with. And similar to what we do with the owner in a joint management structure, we need to have an executive board up front, and they need to know what their roles and responsibilities. They need to know what responsibilities get passed down to the project team. And then clearly how you cost and delineate and define and manage these risks, be it utility risk or permit risk or First Nation risk or delay risk or going through with different municipalities or design risks, and who handles the quantity risk and the growth. And all of those things need to be carefully articulated in a formal document, and then the dispute mechanism needs to be built in. And we have all of those at the JV level because we know we go through all of those things, and all of those things need to be built in with the owner and contractor when you go through these things. And it's not an easy process, and it's not a panacea that makes it easy. These things are mega projects, massively complicated, and they have to be papered correctly.
Darren, do you have any thoughts on the joint management structure?
Yeah, and I think Jean-Louis alluded to it as well. It sounds simple in theory when Chris lays out how well it all works, but the more you stray from strict contractually defined obligations competitively bid, the more you're relying on a governance model to define that path forward. And as much as you can create alignment with gain share, pain share, and no claims, no fault, the reality is all of the participants in that integrated project delivery have different sizes, different cultures, different business interests, different communication chains above the project to get decisions made. As Steve alluded to, that some of these decisions are very big, and the decision maker isn't sitting in the joint management committee. So there is a very big hill to climb in setting all of that up properly. But I think it's not about debating which model is better than the other model. It's about using a model where it's necessary or where it will deliver the right result. So these alliancing models, the more collaborative they get, it's because the problems in them are so deeply intertwined that they have to be solved as you go. They're not easily solved up front. If they're easily solved up front, solve them up front. That's kind of the point. And so I think you've got to pick your horses for courses and match your model to the project constraints. I think I mentioned at the outset that we've moved to new asset classes, and in particular, a lot of these big linear rail projects, they're orders of magnitude more complex than where we started with P3s, which was kind of roads and then bridges. And it's just some of the old model doesn't fit, and some of those risks can't be easily disentangled from the design and construction process. Jean-Louis?
I think the essential has been said. Maybe a few adds. It depends on the type of a project. I mean, as Darren just said, some type of project like vertical building works perfectly with the actual model. Linear project is much more complex because of the interferences. The more kilometer you have, the more interferences you just have to deal with. The second one, I come back to the fact that there has to be a clear responsibility line. Other way, when we have a look, for example, what happened in some jobs in UK, with the next 3, you just arrive to enormous overrun of time and cost, which are not acceptable. And at the end of the day, we are, as a contractor or developers, or designer, we are nothing without clients. And our clients, our owners, will have to decide, for which kind of model they want to go. As I said in my introduction, most of the clients, the owners, are very happy with the actual model. they're not ready to share risk like this. I mean, they are very happy with risk allocation. So we will have also to be careful, because our clients are the ones deciding at the end of the day which kind of model they are going to use, and to optimize it in front of each situation.
Now, it's a good point, Jean-Louis. And one of the things I was hoping to bring out was, this whole alignment of interest, and it's pretty easy to see when contractors form as a joint venture. We have a clear alignment of interest. We want to deliver the project safely. We want to deliver it on time. We want to get a high quality for our owner, and we want to make some money and do it on budget. But, when you really look at those 4 or 5 points, the alignment with the owner on these IPD projects is very much the same. They want it delivered safely. They want, their stakeholders to feel happy with the job. They want it to be done on time. So, if you can define the alignments and then understand the differences, you can sort of paper the process, how to make it work from there.
I think that's a really good point, Stephen. I think one of the advantages, perhaps, of moving some of those things a little bit later is that you do have that opportunity to work together to make sure you better understand what those objectives are, and to develop them in a more collaborative way, so that by the time you're actually trying to put prices to things, there is a better understanding, and there's less that may come later to be fought about. Although, as you say, at the end of the day, when something goes sideways, people inherently will try to look to find why it went sideways. Who was to blame for that? And typically we want to find somebody who was the cause or the person behind the issue. And I think that's where the principles and everything, as I think Darren said, it all sounds great when you lay it out. This is in principle, but when things go sideways, it's a question of how well it's going to work at that point. And I think there's where there is experience that shows that it does work well. I think there's also experience where there have been challenges, but at the end of the day, it's as much as we've built a set of projects using the traditional model. Whenever you embrace a new model on a wholesale basis, there's a lot of uncertainties that can come with it. And so I think maybe what I'm hearing from everybody is that some of the principles that are in these models might well be adapted into or developed into some of the existing models. And in doing so, you can get some of the benefits without necessarily throwing out the entire structure.
I don't think I was saying that, but.
Oh, okay. I got one nod and one no shake. So
no, I don't think you're wrong, Chris. There is some, like I said, risks that can be easily disentangled or better allocated within the existing model, should be, but it's not always possible, and these models are a response to the not always possible situation. And then there is sort of the, some potential benefit, and I agree, innovation can be worked into the process, provided it's always cast in the light of value engineering. When we get into things like sustainability and ESG and design values that are a little harder to quantify and could be important to a client on a given project, maybe a different model is amenable to that. That was more my point. Also, not that the governance model can't work. It's just that it's a big load. You're carrying a lot of responsibility in that joint governance committee, and it's not as simple as it sounds to get it set up and make it work right. That being said, AECOM's done numerous IPD type or alliance type models in Australia and elsewhere, and has many of them have been very, very successful. I think they've done over 70. So clearly the model works there for the people that are using it for good reasons, or they wouldn't keep using it.
Before you sort of drop into any of these projects, Rob, you sort of there needs to be a tremendous amount of work done up front by the government, whether you drop into an IPD or a P3, because you need to, understand what the concept is. You need to understand where the land is coming out. I always think about linear projects because that's my background, but, and the approval process. But all of these things, they need to have a political champion, and they need to have the right budgets put in place. and a very long span horizon from the governments to be able to make these things work. It really doesn't matter whether it's a P3 or an IPD project. I mean, once you drop into these things, it's an enormous amount of investment, both by the government and the private sector, to bring these things to fruition. And so all of this legwork needs to be done up front. And I've been involved in a lot of procurements down in the US where they look at a P3 job or a toll job and think it's easy. And, it's levels of complexity harder. And that's why a lot of the procurements in the US, they start off with great fanfare and then they fizzle out at the end. And I think they've gotten better, but they've never really reached the level of sophistication, in my mind, that we in Canada have. And I think it's a function of, the governments do an incredibly good job up front. I think, as Jean-Louis said, we've got good owners, good clients, and, yes, they beat us up along the way, but sometimes that's our own fault.
So that was great. Thanks everyone. I think we can probably slide over to our next topic. I know each one of these topics could be a seminar in and of itself, but we will keep being this is the contractor seminar. We'll try to keep everything on time. So we'll sort of move now to the early contractor involvement and progressive DB. And Steve, why don't we start with you on this and the key advantages you see in getting involved at the early stage?
Yeah, I think there are a number of advantages up front for, the early contractor progressive design build. As we all in the industry know, these procurement models are incredibly expensive for contractors to bid on. I saw one of the questions on the side, do we as developers, contractors get paid for these things? And I think the owners and the government have done a reasonable job increasing the stipend to a more reflective element of what the bids are, but we still pay many multiples of that, what's going on. So if you truly drop into an ECI progressive design build process where the contractor is paid a portion of their costs as they go through, then you sort of, two of the teams that were bidding on it, they get out of the process. So I think that's one of the key benefits. I think the second key benefit, as we've talked about a lot through this whole thing, is managing the risks and understanding the risks. When I was with Flatiron, we did a project with Caltrans, and it still took a reasonable time to sort of get the deal sorted out with them. I think 8 or 9 months or almost a year. But what we did, we carefully looked at all the risks that we were looking at, and we said to the government, this is how we're going to price these risks. And they said, well, that's too expensive. We'll keep that risk. Or then if they said, no, you keep that risk, then we would build that as part of the price and that transparency. So you get a much more balanced view of the risk transfer. The government have a much more careful and articulated view of what the risks are and how we as contractors view them and what we perceive the risk to be. And then the government can make the decision whether they want to accept that risk or not. I'm sort of with Jean-Louis' camp. I don't believe that these are shared risks. I mean, either we take it or they take it. I think to try to sort of mix the pot up, it just creates an opportunity for a debate that there's going to be enough debates as you go on. So I think, as we go through the pricing exercise and, if you have a sophistication on both sides, then I think it does help. I think we talked earlier about the innovation process, and I think, depending on how the owner sort of wants to look at these things, and I think typically when you drop into an early contractor involvement or a progressive design build, it's probably for one of a couple of reasons. One is they've got a very complicated interface issues that they need to deal with, maybe on either side, that it's not lending itself to a lump sum hard dollar thing, and you need the innovations with the contractor and the engineer and the owner, and potentially the interface with other works to be able to deal with that. So I think going through in a proactive and open dialogue about how to deal with those issues and manage that process, I think probably that's the third key element, I think, Rob, that you would see out of it. So they're the three key issues I think that we see as the benefit, at least from our perspective.
Darren, I'll pass it to you, and then we'll go reverse clockwise on my screen to Darren, and then Jean-Louis, and then Chris.
I'm actually going to defer to Jean-Louis on this one. I think sitting in the contractor chair that he is now, he's probably got the better perspective.
Yeah, I think Steve has told us the main benefits. At Aecon, we like early contractor involvement and progressive design build because it can just solve most of the issue we have been discussing about during the first hour of this debate. I mean, first of all, you're not chosen only on your capacity to be the lowest bidder, but on your proven ability to perform and to make it happen. I remind you that the lack of appetite of the contractor just comes from the fact that they were predominant. So at the end of the day, they were taking the maximum share of risk, and they were the only one really in a pure, wild, lowest bidder system. So first point. Second point, it just allows to give sufficient time to sort out the main risk about design, about third parties, and also to discuss. It's very important what Steve has just said, to discuss them with your client and to make choices. I just remind you that the normal public procurement system is rather secret. I mean,
Absolutely.
You cannot put your ideas on the table like this. And if you think you have very good ideas and you ask questions or you put them on the table, the owner will have, because of the fairness of the process that is accountable for, will have to share your ideas. So usually you don't want to put your ideas on the table. During this ECI, there is a moment where you can put everything on the table, and with your owner, you decide, yes, no, we go left, we go right, you take it, I take it. I remind you that I much more believe in correct risk allocation and pricing than risk sharing. And this is important. So I just think that this process should be successful, not for all projects. It's a rather onerous process in time for the owner, and for the proponent. So it cannot be used for any kind of project, but on specific one, I think it's going to work quite well.
And part of the thing in my mind, Jean-Louis, is they need to carefully define what their budget is up front. They need to figure out what the success criteria is for their side, both for the owner and the contractor, and sort of work your way to that, because it's no good sort of dropping into this process and not having a defined budget. I mean, we say we're going to develop the budget we need to go towards, but there needs to be at least a not to exceed number that the government or the owner is anticipating. And when you start doing the green sheets and you start to develop your process as you go through these things, you can at least, if you're in the process correctly with the owner, you can tell them this has a degree of work or a percent degree of working, or it doesn't. And at the end of the day, then those ideas can percolate and work your way through. But there needs to be parameters for time and money that the contractor can work with the owner to be able to define how to make that successful.
Chris, any thoughts on this?
Yeah, a couple of things. I mean, one, I think the point you're making there is really good, Steve, and I think there's two elements to it. One is that you've got an idea of what your budget is, but the other thing is that the process allows for the development and refinement of the design together with the costing. Whereas, and I've heard said before that sometimes in a more traditional, it kind of goes the other way, that you kind of do your design and then try to figure out what the cost is, instead of being able to kind of build the cost and the price up together as you're making decisions about the design with the owner as you're working through it. And I think perhaps it also allows for, back to the innovation concept that we've been talking about, is that an owner may be a little bit more willing to give up a bit of the control because they're part of that design development process together with their early involved contractor, early involved designer, versus a more traditional, here's our specs, you go away and come up with something and then come back to us with it. And there may be a bit more of a reticence to open up the flexibility, because by the time it comes back, it may not be what they had wanted or had envisioned that they wanted. So I think there's some additional benefits that can come from that. And finally, I think the last thing is that it encourages discussion. And the more you're able to sit down and talk frankly between the two parties, the better understood those issues are, and the better you're able to tease out some of the things that might later raise their head, which could have been resolved had they been discussed in a frank manner up front. And to Jean-Louis' point, that in a more traditional, it's difficult to put some of those issues out in a truly open or transparent manner.
Just talking to both of those points, Chris, because I think it's a great one. I mean, when we bid these jobs, we bid them on, pick a number, 20%. I always think it's less than that design. But then we say that we're going to innovate during the bid period, but time is our enemy when we win these jobs, and been with a lot of guys, and we've made the decision to go and innovate, and it creates no end of a problem for us where we change the base design and do something different. And then now typically what we say is once we lock in on the bid design, we're not going to make major changes because, whilst it may sound good at the beginning, we invariably, the green sheet never proves out to be what it is, or it's additional delays, and the LDs and damages that we as contractors face for delays are so significant. We really don't have an opportunity during the design period, once we've won, to truly optimize it. And I think that's one of the benefits of this early contractor involvement. You really do get a chance to flesh them out, and rather than just giving a hard dollar on 15% design or 20% design, you take it up to a design that clearly articulates what you're doing, and be it 50 or 60% or whatever the percentage is, and then you can make a conscious decision with the owner. This is when we're going to lock in and give you a hard dollar, or keep components open at that stage. So it does open the dialogue a lot more of those. But I do agree with Jean-Louis. It's not for everything, and it needs to be for a defined process.
So that's a great actually segue to our next topic on procurement, and I see some questions bubbling up as well in the feed on procurement. So Chris, why don't we start with you leading off on the difference in the procurement process for the new delivery model to the traditional P3 model, which a lot of folks on this line are familiar with.
So I'll provide a sort of a fairly brief overview, because I think folks are probably more interested in hearing the contractor's perspective on how this plays out. But the biggest difference, as I've alluded to, is the fact that you're not producing a fixed price bid. That's the biggest difference. And as a result of that, the processes change in terms of some of the factors that are being evaluated. And, I know at least in some of the projects, you're still going through a relatively traditional RFQ process to get down to a manageable number of bidders. But the RFP process looks a little bit different in terms of going through a few different phases and trying to, initially get down to, say, 2 bidders, and then working through some of those design development workshops, interviews, etc., to get down to your single preferred proponent. And the evaluation mechanism also has to vary as a result of that. You're not looking at a low cost, as Jean-Louis has flagged a few times. You're looking at experience, capability. Have you done these types of things before? And looking at the individuals and the people, and are you able to work in these models collaboratively together, using interviews, using some of those processes, and looking at some of the plans. How are you going to put these alliance principles into play? How are you able to, demonstrate your leadership and your collaborative, working approaches through some of these procedures? Still subject to fairness, still subject to, a robust selection process, but some of the elements that are being evaluated are different, and some of the tools by which they're being done are a little bit different as well. And one of the key points is, the design, as I say, comes later in the process. The pricing comes later in the process. So as I say, perhaps I'll turn it over maybe to the contractor folks, and one, they've probably been through some of these processes and seen where it works and where it's caused challenges. But also, I think one of the interesting things I'd be interested to hear about is how does it change some of your decision making in terms of putting together your team for bidding? You're looking at some different criteria and perhaps some different players within that team that goes forward as your bid.
Yeah, thanks, Chris. I mean, I've over the last 15 years developed a lot of teams, and I had a pretty good record on shortlisting there because in these P3 jobs or design build jobs, you have a clear idea of what the owner will be looking for in terms of criteria, and generally the experience level of the different partners, be it designers or operator, equity provider, and so you can craft your team to be able to address all of those variable components. The difference with the early contractor involvement or progressive design build projects is there's not a lot of contractors that have truly been involved in this process and have true credentials to be able to say, I've done this as an ECI project, I've done that as an integrated project delivery, and I've got 15 projects. I mean, you look at Aecon or AECOM or Parsons or whatever, we have a large suite of design build P3 projects that resonate to all of them, and all of us have some degree of ECI and IPD, but not to that degree. And so when the owners are looking to pick those, they can't go with the traditional, I've done 15 of these projects and hence I get a better score. They need to be, as you say, looking at what is the criteria that you need to be able to deliver a successful project, and then the owner needs to work his way back to figure out, are they going to just select 2 bidders, and how far are they going to go with that? Are they going to just select 1 bidder? And then they need to sort of define all of those criteria. And the process needs to be laid out very clearly all the way from beginning to end. And that's why I say the owner has to invest a lot of time and a lot of money up front to make these things correct. And then they need to clearly identify this to the contractors well before they start the procurement process, so that we can craft our teams. I mean, we all know that we start the teaming for these projects a year, 18 months in advance. So the communications from the owner about what the procurement model is, what the successful criteria is for shortlisting, how you're going to get through the process is very important to someone like Aecon or Parsons or AECOM, how we craft our teams and sort of go forward. So that early communication, along with the definition of what's going to be successful, is pretty critical to us as we develop our teams.
Darren, do you want to go, or?
Yeah, I mean, I think briefly it's shifting the emphasis from credentials on paper to people in person.
Good point.
And it's going to be especially important in the first versions of these that are done, because it'll be a learning process for everybody involved to iron it out and make it work. So having the right people, ideally with experience, but with creative minds, flexible thinkers, good communicators, that just becomes more important.
Jean-Louis?
Yeah, I would add, evidently, for those kind of projects that we will go through this new process, it will change the way we build capacity at Aecon. It's not going to be the majority, and it's what makes the difficulty, that we will still have to cope and work with the traditional project. We are doing hundreds of projects of $500,000, $1 million, I mean, small job, medium jobs, industrial jobs, utilities jobs that have nothing to do with this kind of processes. So a few one will shift to those kind of more collaborative processes. And on those one, yes, we will have to change the way we build our capacity. I mean, the way to choose partner is a little different, and especially in time. I mean, it's not only as we have been doing during years to say, for this project, I want this engineer, I want this international partner, and I want this specialty subcontractor. I mean, you have to prove that you can deliver, and the history of the group is becoming more and more important. It means that we will have to create much more stable partnerings with this new way of working. And once it is awarded, evidently in the progressive design phase, I mean, we have to get special people. As I said, it's not about hiding your secrets. It's about, I mean, putting everything on the table and make the best out of it. It's about transparency. So this is a change. Some of our people are perfectly acquainted to this. some a little more with a little more difficulty. There is training for this, and that's what is making all that, I would say, extremely exciting. But at Aecon, definitely we are ready. We're ready for this. I mean, when it's appropriate.
And so, in the spirit of audience participation, since we're on the procurement topic, I see there are some questions here that do relate to procurement or at least bid participation. So, why don't I just take this one? I know we have our Q&A at the end, but maybe what's the view on competitive alliancing or competitive IPD? And would the contractors engage in that process if there was an honorarium and it was high enough? That's an open invitation to anyone.
No, that's fair enough. So I think the question is saying, rather than just picking one team for the ECI or IPD, they pick two teams and then they sort of go through a process. And I think that's what I was saying at the earlier comments, Rob, is the owner needs to define what the process is and work their way back, and whether, it's two teams or one team that they select, and then how far they take two teams before they make a decision to go to one team. So, from our perspective, or at least I've seen it, where we have gone into competitive situations on an integrated project delivery. It's a different mechanism than going through on a full P3 job, and it you don't take it to quite the same level of what you do, but you certainly work with the owner to a certain degree, and then come up with some good ideas. And it's part of that collaborative dialogue that you're going through with the owner to be able to give them confidence and comfort that from three aspects. A, that you've got the right leadership team in place, as Jean-Louis is talking about, to be able to work with the owner, because this is very much a collaborative process to work with. Two, that you've got the correct mindset to be able to develop the constructability issues, the design issues, and integrate with the owner from that perspective. And three, that you've got the mechanism to be able to cost these in a transparent and open and reasonably quick manner. So all of those elements need to go through in a sort of prescribed manner. And from my perspective, you need to sort of cut that off at a reasonably quick period of time. But I don't think there's anything wrong with taking two teams through to a reasonable period with the IPD and then selecting one and going through at that stage.
I think Steve said they've already done it in various places, and they'll look at it again in context of all the other opportunities they have in front of them. So if the process is too long, too onerous, with too uncertain or smaller reward at the end, There's better opportunities, and that's the market. So you'll only find out by doing. But if you continually use competitiveness as a hammer to drive all the upside for the contractor out of the business, at some point they will leave the table, and that's partly what we're seeing in the market today in certain projects.
Yeah, I think it's tying one, as Steve, I think you've made very clear, and it's a really good point, is the clarity of the process and making sure, I think with any process, that everybody knows what they're signing up for. And then you can make an educated decision of whether or not you want to pursue that opportunity, and you can weigh it against the other potential opportunities out in the market. And I think that's one of the factors that'll weigh in. And then being able to assess, what is the investment that's required to go through the processes as far as it may go. And I think some of the processes are actually taking two proponents fairly far into the process in terms of setting the target prices and whatnot, but assessing what your investment is against what the honorarium is, what the chances, if you're going through and there's two bidders versus a traditional P3 where there may be three going all the way through. I'm sure it's not a direct 2/3 versus half chance, but I'm sure those are all factors that weigh in. And so understanding, as with any procurement process, being able to understand what it is that I need to do to be able to win the process from the outset, to make an educated decision, and being able to make those decisions as you go through the whole process is critical to participation.
I know we have we're nearing the end. We're going to approach our Q&A period, but I would like to just tackle our last topic and give some airtime to it: the role of private finance in the IPD model, and maybe some of the opportunities and challenges that are there. So maybe Jean-Louis, I'll start with you on this one for your view.
Evidently, we think at Aecon that private finance has its role within those new processes. It is just the moment private finance enters into the process that is a little delayed. They just arrive at the moment, the risk have been fixed, the allocation have been decided, and the costing is available. But nobody is questioning, I think, around the table, the pros of private financing for those kind of contracts, especially when we speak about whole life cost of all those infrastructure investments. This is not, I would say, an issue. Private finance is still needed, especially after 18 months of COVID, when we see, all public funds that have been used to protect or to preserve the economic landscape. This private money is absolutely needed. On another hand, the last 15 years have created in Canada, I would say, an environment of extremely professional developers, financiers, all those players are just ready to go on, and I think they are absolutely needed. Yes.
Yeah, I'll comment. I think given our position in the private sector, we're probably believers that equity investment and risk, fosters creativity and opportunity and ingenuity. So I think there's been there's some interesting points made in the previous discussion about unsolicited proposal models and some other ideas that, probably can't replace mainstream planned scheduled infrastructure delivery, but could unlock interesting alternative solutions. It's hard to have the discussion about equity without the discussion about operations and maintenance. So, it's in addition to financing the cost of the project, it also sort of acts as a bridge to link the design build portion and the OM portion of these DBF OM deliveries. And if there's no OM, then the equity gets diminished in size and importance possibly. So, I won't take a view on whether adding OM makes sense every time or not, but it seems to be there's been a tendency to get rid of it, and maybe we need to look at the value of the OM contracts as well. And then
Darren, Darren, you may be clairvoyant because that was a question that was asked.
Oh, okay.
In the feed.
Yeah, well, that's sort of the traditional linchpin of putting those two pieces together. But, to be fair, some of the risks that the contractors are struggling with aren't solved by third-party equity, third-party utilities or railroads or, these misaligned third parties in the project that have to be somehow brought into alignment with the overall goals of the project. I'm not sure it's a panacea solution for all of the challenges we're talking about today.
Yeah, I think from my perspective, again, it's not everything that one model fits everything, but I think, these long-term P3 projects do show some value. I think especially in highway projects where, you have a defined maintenance period, you have a defined rehabilitation period, what you're expecting to get back at the end of the life cycle period. I question the veracity of using that model for, transit projects. I think about, the Canada line at, rightly so, the government were locked into a scheme where it's very difficult for them to expand on it. The success of the project made it so valuable. It's difficult for owners to go through and make major changes and without creating difficulties. So I absolutely am a firm believer that full long-term P3 projects are important. I think It forces the contractor to carefully evaluate the life cycle risk, build these components incorrectly. And I think, we forget about the main benefits of these things is that you have an asset that's being maintained to a high degree of quality with a certain price and very significant penalties if you don't. I really don't look at it as being the cost of financing being more competitive than what the government can provide, because it never really is. It gives an end-to-end solution. But again, it needs to be for the right project at the right time, and understanding what are the off-ramps that the owner needs to build in, because we've seen that on multiple projects over the last 10 years that they get locked into something so rigid, it costs a ton of money for them to break those agreements. So I think again, you need a sophisticated owner to be able to understand and ameliorate the concerns as you go forward.
Great. So I think that takes us to the end of our, Chris, I don't know if you have any thoughts on private finance. Otherwise, we can just go to our Q&A session. I know that we only have about 7 minutes left here. So I think we'll do that. And maybe I'll lead off with a question to the panel. Obviously, contractors work all over the world. It's a global village. We know governments all around the world are going to be spending money to get themselves out of COVID. It's going to put a lot of pressure on public procurement. I know we've talked about capacity here and this not being an issue, but do you see competitive pressure from other jurisdictions being brought on some of these models and some of the risk allocation for public authorities to consider?
I'll probably start off, because I think Darren and probably Jean-Louis alluded to it early. There are a lot of opportunities out there, Rob, and I think the procurement process has to be fair. It has to be correct. It has to be known to be a true project. If you're going to get the best in the business to go after these things, and we all know who the best in the business are, or at least we have a perception who the best in the business are, you need to understand that there's a lot of private money out there building private infrastructure, but the plethora of projects that are going to be coming out from the US and Canada and elsewhere around the world is going to be very significant as they ostensibly use the infrastructure as a kickstart to the economy. So, we that are in this space have been very fortunate that the governments have supported us over the last year and a half, and we've done well. But there are going to be a number of good opportunities coming up, and it's certainly one of the big risks that we face is inflationary problems, and that'll be a function of big jobs that come up. So I think there are going to be good opportunities, but whenever there's good opportunities and they're put together correctly, you'll have the best contractors going after them.
Darren?
Yeah, from the perspective of having worked with, for an international infrastructure company and working for an international design company, Canada's, very well regarded globally as an excellent jurisdiction to do business in. And that's a strength, and let's foster that and keep that going. But there's that was always very clear in the discussions I've had.
I think one of the things we always hear is that the Canadian experience with the P3 is the certainty and the success that's been built upon in terms of how it's worked over the last number of years, and so obviously with other countries, also embracing larger and more projects, potentially with different models, contractors are going to make evaluations of the risk, the ability to make a profit at the end of the day, and make decisions as to where they go. And so, one of the things that we have to be careful of is, one, we need to be responding to what the market is doing in Canada and making sure that if there are concerns that they're being addressed, but at the same time, we don't lose the history, the certainty, and the reliability of our processes in trying to, change things too much and too quickly. So I think it's going to be a matter of striking that balance. But as others have said, it is part of a global marketplace, and like it or not, we're competing with other provinces and other countries in each of these projects, or the owners are. And then the contractors, of course, are competing amongst themselves in terms of where they want to go. And so it's about striking those balances, but not losing some of the things that have made the Canadian experience successful.
I would add, I'm optimistic. I mean, as a constructor in Canada, the main train is 500,000 of newcomers coming every year. Those people need highways, they need power plants, they need fresh water, they need treatment for used water. All this is about infrastructure. All this is about what we have been talking about. So there's a lot to do. The energy of everybody is needed. The private sectors, I mean, of course, we like at Aecon the fact that we can work on short-term, mid-term, and also, as we were saying, long-term. I mean, those operate and maintain phases are quite good for our company. So, of course, we will be here. I mean, we'll be responding. We just needed a little more fairness. We just need some reasonableness. I mean, in all the process on special aspects, and I think all this discussion is excellent for this, and I'm very happy about this discussion because it goes, I mean, evidently in the right direction for us.
So with that, I know we're almost out of time. I will just pass it along to the panel members for quick elevator 10-second last minute closing thoughts on a revolving project delivery model, IPD alliance. Any sort of closing thoughts or closing nuggets that you want to leave the audience with before we sign off. Why don't we just go, Chris, we'll start with you and then we can circle around.
I think the reality is we're here. The evolving or the new models are in the market, and so we all have to deal with them, understand them, and I think that's the key, is making sure that everybody understands how they are different, because the models do have differences from what we're used to, and if we don't fully appreciate those, there's likely to be new and novel challenges that we may not have anticipated.
Jean-Louis, any parting thoughts?
I would say together we are stronger. We just need all the different partners around the table. There's enormous amount of infrastructure to be built. We just have to be careful to fix the issues, and there are some issues, but not to throw out the baby with the bathwater. I mean, the model works. I mean, Canada is an example all around the world about the pipeline and about the fact that projects are being delivered. So we have to be careful, but we work with enthusiasm toward it.
Well, I know, sorry, Steve, I know we've hit our 3:30 mark, but we'll, just if you have anything.
No, I just echo what Jean-Louis said. We're incredibly optimistic about. I think when you look at the pipeline for the next 10 years here in Canada, we are all very fortunate that we're in this business, and I think we stand an opportunity to build good projects, make some money, and develop our next group of leaders to be able to carry on.
Excellent. Okay, well, that brings us to the conclusion of our panel today. Thank you to all the panelists for their participation again. This was a fantastic discussion. So thank you. I want to thank again CCPPP for hosting the event, and this has been great. Once again, thanks to the participants, and thanks to everyone who has dialed in and viewed the conference today.
Thank you.